Hello and welcome to Bloomberg Quint. This is the market wrap. Major indices may have retreated, but the more important news for today is the ordinance, and this has to be related to the Banking Regulations Act, where RBI has now been empowered to battle bad loans. Well, Shraddha, coming back to what's actually gone down today, can you tell us a little more about what this ordinance holds and how important it is?
Absolutely, Agam. So the government has notified the Banking Regulation Amendment Ordinance. What this does is gives the RBI the power to take decisions on the resolution of individual bad loan cases. And post that, we saw the PSU bank stocks seeing a sharp correction. So the blue line, that's your Nifty PSU bank index. So the index itself fell as much as 3.2% on the back of this news. Now there could be two reasons for that. One, the fears of any haircut that may come in, could lead to a hit on the bottom line, especially for the banks which have a low capital buffer. And secondly, stocks had run up unilaterally in anticipation of some resolution announcement. So both those factors could probably have been contributing to that fall. To join us on this discussion, we also have Mr. Chokalingam, the founder and managing director at Economics Research and Advisory. Thank you for joining us. So there are two views coming in. One section of the analysts are saying that directionally this is a positive step. Any step towards expediting resolutions and giving more power to the banks against willful defaulters is healthy from a cultural perspective. On the other hand, the other thought is that the new measures may not necessarily lead to solve the NPA crisis, because even if an account is now being able to declare as insolvent, there may not be enough buyers. So what's the outlook on PSU banks in this situation?
Well, certainly, there are cases where the banks have lent 2,600 crore. When they really went to auction the assets, there was no bidder for beyond 160 crore. Right. So that is because of the long delay, from the regulatory point of view. But certainly these measures would help, the banks to act very fast and, if needed, acquire the assets, change the management or convert debt into equity. So all these are possible. So to that extent, it is certainly very positive. But stocks have run up. As you mentioned rightly, many PSU banks are trading at even 7 times adjusted book value, 7 to 10 times. That is also historically, not happened in the past. So therefore, one should not go too overboard after this recent rally in the PSU stocks.
Okay, so you would rather be cautious as far as those PSU banks are concerned. And so most of your larger private banks have already reported their earnings. What are the thoughts? Because private banks could probably also be impacted by this. If any haircuts have to be taken, they have to be through and through by all the banks. Any thoughts on banks like Axis Bank and ICICI which have a larger corporate book?
Certainly, very interesting. See, there are two themes one can discuss. As I mentioned, a lot of PSU banks are too costly, trading at 7 times, 8 times adjusted book value. Then you have a Yes Bank, IndusInd Bank, right, trading at 5 to even 7 times book value. So to play safe, one can look at the two themes. One, as you mentioned, Axis Bank. So there are banks like Axis Bank, because slightly elevated net NPA, they are still available at below 3 times adjusted book value. So that is one space one should invest. Second thing, very interestingly, if you look at the big banks, they are having a 4%, private banks, 4% NIM, net interest margin, and trading at the 6 to 7 times also book value. Now, industry credit growth is growing at around 5-6%.
Right.
Now, so when the whole industry is growing only at 5-6%, it is very difficult to maintain 30-35% business growth for these banks. So which means, on the one hand, it is going to be tough to maintain the kind of growth they maintained in the past in business, and two, going forward, to maintain the kind of premium valuation is also going to be tough. So therefore, I visualize a situation where there will be some acquisition of old private sector banks.
Right.
So that is a space where investors can look at, because in terms of valuation also, many of them are trading less than or around 2 times book value. So relatively very cheap also. So that is one space, apart from the banks like Axis Bank. So according to me, that makes a lot of sense to make money.
All right, fair enough. So, of course, Agam, you did see all these PSU banks sell off post their announcements. You have Bank of India, Union Bank of India, Syndicate Bank, IDBI Bank. Canada was the only one which was really bucking the trend ahead of its earnings. But that apart, we also had metal stocks which were under tremendous pressure today. This entire commodities rallies that we have seen in the second half of 2016 and the first few months of 2017 now seems to have sort of hit a speed bump. Of course, you had the WTI crude which fell below that 45 mark for the first time since November. Mr. Chokalingam, are commodities looking a bit overheated now? What's the call that you would take on metal stocks?
Certainly, I agree with you that it's slightly overheated or rather highly overheated. Because some of these metal stocks have gone up even 300 to 400% from the bottom. If you take, for example, Vedanta, even Hindustan Zinc from 130 it went up 330. Now there are two things happening in the short term. One, the inflation is reversing in some major economies suddenly, and two, there is a fear of deflationary once again. The signs of deflationary rather, like what we saw in 2016 early Jan February, because of the protectionism. There was a report, Bloomberg itself that. Post consequence of post US pressure on import of Chinese steel, the Chinese steel price have crashed 23%. Now the protectionism across the world is rising, so that could lead to more moderation in the metal and resources prices. And yesterday we saw the oil crashing even 6% in a single day. So this is going to give a lot of fear on metal and resources. So therefore one should be very cautious while picking up the stocks.
Okay, but Agam, the India Volatility Index spiked as much as 6% today.
Sure, it did, but it's still at extremely low levels. But what we've seen is a change to a certain extent in the options market. While we have seen a little bit of selling in futures, it isn't substantial despite the fact that we've seen a drop in the Nifty. But to take a look at what's happened in the options market, we're looking at more writing in the 9,300 and the 9,400 calls, which means that there is some amount of resistance building. And that brings me to maximum open interest, which now lies between the 9,500 call on the upside, but we've seen the 9,400 take over the 9,500 one, and of course on the lower end we have 9,000 and 9,300 as very important zones of support. So we're expecting the Nifty to move within the range of 9,300 and 9,500 in the immediate term based on the kind of options data that we've seen. But my question then to you, sir, would be where are you seeing the Nifty headed at least over the span of the next couple of weeks?
Yeah, see, certainly very interesting insight is that last time Nifty was a similar level, our Sensex was around 30,000. The entire BSE listed market cap was around 105 lakh crore,
right?
105 trillion rupees. But now, as of yesterday or today, it's almost around 125 lakh crore.
Right.
Whereas Sensex is same, even the Nifty is same level as compared to March 2015. So what it means, in the last 2 years, though the broad indices are more or less same compared to the previous peak, the market cap of the entire market has gone up by almost 17-18%.
Right.
So which means the large cap stocks have not participated. It is only small and mid cap stocks which have participated. So therefore, according to me, due to the rising protectionism and the signs of renewed signs of deflationary scenario, there is a possibility of the small and mid cap falling, but the large cap stocks, Nifty for that matter,
right,
holding up for some time in the short term. But in the medium to long term, as I mentioned earlier, one has to continuously monitor, the consequences of rising protectionism on the deflationary scenario.
Right.
If that evolves in a big way, then what we saw in 2015 post March can happen. I am not forecasting, but one needs to remain alerted.
Right.
And second, on the domestic front, one has to watch out this monsoon performance.
Absolutely.
That also becomes very, very critical.
Right.
Alright, so if we just address the Nifty movers, as we mentioned, it's the banking and your commodity related stocks which were dragging the index lower. So you have Bank of Baroda that fell as much as 4.5% gone for the stock, biggest drop in nearly 3 months. Hindalco, you have ONGC, GAIL, Reliance, all of the energy related stocks also seeing pressure. Amongst gainers, however, it was Cement Pack, which was a saving grace. So you have ACC and Ambuja Cements, which were sitting on gains of 1 or 2%. India Bulls Housing Finance also bucking the trend with a gain of nearly 2.5 to 3%. But Agam, the trend was bearish or weak when it came to the mid caps.
It was, but before I go to the mid caps, I do want Mr. Chokalingam's view on any calls on the large cap stocks that you have for now.
In fact, we have been advising our clients to have a tilt towards large cap. As I mentioned, I am still worried about bubble in small cap.
Yes.
So one stock which gives me a lot of confidence is Mahindra and Mahindra.
Right.
Compared to stock like Maruti, it has not rallied. And on consolidated basis, on 1 year forward earning, it is available around 14-15 PE.
Right.
And the management is going across the world. and it's also going very aggressively on farm sector, and then within the farm sector, non-tractor segment is a focus area.
Right.
And in Korean business also we see a lot of opportunities to improve. So therefore I firmly believe that in the large cap space, M&M is a one stock which gives you a lot of comfort and safety, and also assured return in the medium to long term.
Right, so we can keep an eye on Mahindra and Mahindra. But coming to and addressing the broader markets, we have seen just about one gainer for 4 losers. So the market breadth has worsened as compared to what we've seen the previous few days. But let's take a look at some of these losers today. We have Tata Communications, which has declined by 9%, followed by HCC and Rain Industries, as well as Gen Irrigation, so showing substantial weakness. Hathway Cables and Shilpi Cable Technology continuing their downslide. On the gaining side, we have Dilip Bilcorn, which has gained about 7.5%, DB Corp, Ahluwalia Contracts, Escorts, as well as Phenolics Industries, all gaining anywhere between 4 to 5% in today's day of trade. And as you can see, the momentum now has shifted more towards the losers. But I will come back to you, and you also have a call on Vindhya Telelinks. You are positive on that stock.
I firmly believe that Vindhya Telelink could be a multi-bagger in 2 to 3 years, and there is a lot of comfort in the stock. In terms of management, it is one of the Birla Group companies.
Right.
The balance sheet is very comfortable, leveraging is very limited. There are 3 triggers in the stock. One, the Digital India initiative is positive for optic fiber, and Vindhya Telelink is one of the major players of optic fiber.
Right.
2, this company got into EPC project, for telecom sector about 3 years ago. That segment has more than tripled the turnover in 3 years.
Right.
And that is also going to be a beneficiary of a Digital India initiative. The third trigger for the stock, that's the most important one. This has got stake in Birla Corp, a cement company. The value of the cement company shares is 2 times the market cap of Vindhya Telelink.
Right.
So on the one hand, the stock is available at around 12-13 PE. On the other hand, it has got a 50% discount only to the value of investments it holds in Birla Corp, a cement company.
Right.
And we have seen a lot of consolidation in the cement business.
Right.
So if that happens, it can unlock a big money and it can be a multi-bagger. Otherwise, decent 25-30% return it can give.
Right. So Vindhya Telelinks is another one to keep an eye on. Mr. Chokalingam, it was a pleasure speaking with you. Thank you very much for your time. And as for you guys, stay tuned to Bloomberg Quint, and we will see you next week.